Schrieffer. I am the publisher of Agora Financial. I'll be your host tonight. We're coming to you live. It is about 6:59 here, so if everybody on the line can kind of hold tight, we'll get started here right on time in about 30 seconds to a minute. Again, for everybody joining us, thank you. My name is Joe Schrieffer. In just a moment, we'll get started with the Income on Demand Training Wheels Trade webinar with your editor, Zach. Probably be about another 30 seconds before we get started. Okay, looks like the clock just struck 7 p.m. here on the East Coast. So again, welcome. My name is Joe Schrieffer. I'm the publisher at Agora Financial. I'll be kind of the moderator slash host this evening. This is the Income on Demand Training Wheels webinar. Your guest, of course, is your editor, Zach Scheidt. Zach is the editor of two of our publications. The first is Lifetime Income Report, and the second is Income on Demand. Obviously, you are all subscribers to Income on Demand, so we wanted to welcome you, say thanks for joining us tonight. The purpose of tonight's webinar is to walk you through, step-by-step, an actual trade. And to be completely transparent, for the reason that we're doing this, Income on Demand is a service that I'm very, very proud of. If you look at Zach's record, we just had it audited by an outside firm called Alpha Verification. Zach is something ridiculous. He's something like 125 for 127 as far as winning plays. So 125 of 127 right around there winning plays for something like a winning average of 98.44%. But here comes the complete transparency. Despite this amazing track record, Income on Demand has one of the highest cancellation rates of any of our high-price services. So the only reason that we could figure out for that is that most of you may not understand Zach's strategy. So that's exactly why we wanted to host the webinar tonight, is to walk you through trade by trade. Because again, this is something I'm personally proud of. It's something that I personally use in my own account to personally control my own family money. I've probably used the transaction that you're about to see maybe 30 or 40 times to generate a couple $1,000 in my own account. So Zach's going to walk everybody through how to do it, because I'm convinced once you do this once, you'll never look at buying stocks in the same way again, and I very personally feel that way. So again, Zach, thank you for joining us tonight. Thank you for everybody at home. So welcome, Zach.
Thanks, Joe. I appreciate it. I'm actually really excited to be here. Can you guys hear me okay?
I can hear you perfectly.
Awesome. That's good news. All right, so
Zach,
yeah,
before we get started,
yes,
just
sir.
a couple things to let everybody know. First, this is live. This is not pre-recorded, so forgive any stutters or stumbles. We're probably going to make them tonight. Second thing, there is a chat window. You can use it at any time that you'd like, although we cannot answer personalized investment advice. So later on, we're going to have a Q&A section. Again, since I'll be moderating, I'm going to try to take the most commonly asked questions. I see a lot of you using the chat window right now. I see Walter, I see Paul, I see Nick, I see Ron. But if you want to go ahead and just make sure your chat's working, you can say hello. I'll call you out by name in a couple of minutes. So Zach, with those kind of caveats out of the way, that number one, we're live, and number two, everybody can use the chat. We'll get to the FAQs at the end.
Yep.
Welcome, and thanks again for showing us what you're going to do tonight.
Thanks, Joe. Thanks. Yeah, I'm actually very, very excited about this. This is kind of near and dear to my heart, because it's really all about helping you guys create income, and that's why I'm here at Agora Financial. I'm really proud of the system that we've got. I'm really excited about our ability to create income from selling put contracts. And I just want to make sure that we make this perfectly clear and easy and usable for everybody. So that's what the purpose is behind this whole thing, and I'm really excited about it. So two things real quick before we get started. One is I want to ask you guys if you could mute your cell phone and turn off the TV and anything else that might be distracting you, just because I think this is really important, and that's why I'm sure you signed up today. This could be the difference between earning a lucrative stream of income or not understanding how things work. So I just want to ask, please minimize distractions. I'm here at my office away from my family so that we can all just really focus on what we're doing here. And then the second thing is just that it'd probably be helpful to keep a pen and paper handy. If there's something that that comes up. You can write down notes, and just that way when you're going through a trade, and we're going to be sending you a real live trade that you can do as soon as the market opens tomorrow morning. You'll have notes in front of you that'll help with this. And one other thing is we are recording this webinar, so you'll have access to that recording as well. So if there's anything that you missed, you can always go back, and of course we're going to be answering questions later. So let's jump right in. You know, as I said, this is really a powerful strategy. It's something that I've used personally in my account. I've used it in my IRA for more than 15 years. I used it for 8 years at the hedge fund that I was at, and it was a way that we created income regularly in our high net worth client accounts. But it's much more important to me to be able to show you how to do this on a week by week basis, because, you know, honestly, to me, that's a lot more rewarding than helping some rich guy get even richer. In August, we made $2,836 in income using this strategy. In September, we're actually already over $4,000 in income. So this is a very powerful strategy, and it's something that that I believe in sincerely, and I'm excited to be able to show it to you today. Even though those numbers are very large and they're very lucrative, I want to do this trade today to help you realize something a little bit smaller. Today we're going to introduce a Training Wheels income trade. And the whole idea behind Training Wheels is that I want to help give you a very small trade that's very easy to enter, one that will pay you a small amount of income, but one that you can make in any kind of brokerage account, whether you have a large amount of capital in your brokerage account or you have a small amount of capital. This is an easy trade to help you get started. The whole idea is not to make a lot of money tonight. The whole idea is just to show you how to do one trade so that you understand exactly how this trade works, and you'll be so confident that moving forward you'll be able to make that $2,400 a month, or that $4,100 a month, or $3,000, or whatever it is that we're able to show you how to do. You'll have the confidence to reach out and grab that money and put it in your account week by week. All right, so let's start with what accounts you can actually use to collect your income. And really,
Zach, sorry, I don't
yes,
mean to interrupt you too much here, but this is a question
Go
that's
ahead.
coming a lot in the chat window. A lot of people are wondering what type of account they need, what level options account that they need. So if you can walk through this will be fantastic for everybody.
Yeah, that's a great idea. Let's start with that. So really, any brokerage account will work. I've got a list of names up here in front of you, but any brokerage account that you can buy and sell stocks in, you can do this kind of trade in. You do need to have approval for income trades, and specifically approval for option income trades. Now, you can request this, and we'll show you exactly what the form looks like. You can request this in your brokerage account, but first I want to answer two quick questions. Are options risky? The answer really depends on how you trade options. We are going to be taking the safest approach to options, and I'm actually going to be showing you trades that have less risk than if you simply bought shares of stock. However, there are traders who use options in a much more speculative, much more risky way. That's not what we're going to be doing today. And that's not what income on demand is all about. So this whole strategy is about helping you become rich slowly, not become rich quickly. This is not a get-rich type of a service. The other thing is, are options confusing? And they really don't have to be. This is something that I really have made it my mission, and I'm passionate about. I want to help show you how options do not have to be mystifying or confusing. So we're going to go through that today and show you just how easy it is to trade these options and to collect income. The first thing that you need to really look at in your account is you'll have an options approval form. And this is what we'll need to fill out to get permission to sell put contracts in your account and collect income from them. These forms are very simple. They're all a little bit different. I'm showing you the one from TradeStation, which is one of the brokerages that I've used in the past. You'll have a section for your personal information. You'll have another section where you can tell them what kind of options trades you're going to want to use, and then a section where you enter your experience or how much experience you have trading options. And this last section is really just a cover your butt section for the brokerage account, so that they're able to minimize their risk. So let me show you really quick. After you put your personal information in, you're going to tell them what kind of options you're going to want to use. Now this is just a little screenshot of that portion of the form that I just showed you. You'll notice that we're only going to be doing the covered call writing or protective puts. Protective puts is just another name for selling puts. Now, there's no, this is the only box that we're going to check. Notice that the other ways that we trade options, the other ways that it's possible to trade options, are all speculative. This put or call buys is noted as speculative. Put or call spreads is noted as speculative. Put writing is speculative. Uncovered call writing is a highly speculative activity. So we're not doing any of those. We're doing covered call writing and protective puts only, the most conservative income trades. The last section that you'll need to fill out is the how much experience you have trading options. I think this is something that a lot of people don't understand when they fill out their options form. When you make your options trade, you're going to be trading based on my experience. I've got 15 years of experience trading these type of trades in my own account. I've got 8 years of experience at a hedge fund in Atlanta, where I was trading these options for our high net worth clients and for the hedge funds that we manage. So in a lot of ways, you're able to use my experience in your account as you make these trades. The brokerage account is going to give you clearance or not give you clearance based somewhat on your level of experience. So just keep in mind when you fill out this form that you will be working with my experience on all the trades. You can follow along and I'll tell you exactly what to say for each of the trades. And that'll help you as you get approval for options trading. And then notice at the bottom that we're going to be using these options for income. And that's our purpose with these option trades. So once you get those option forms filled out and you get permission from your brokerage to trade options, you're approved and you're ready to collect income. You can start right away. So that's really all there is to it to get your account up and ready and able to trade options. Joe, does that make sense and help cover our questions?
Yeah, absolutely. We've got a lot of questions coming in about account sizes and things like that, so we'll cover those later.
Okay.
But absolutely makes sense. Covers the question on the brokerage account. We'll get to the account sizes and some specific put selling questions a little bit later.
All right, well, let's keep moving forward then. Right now I want to show you what a cash secured put is, because this is the type of trade that we'll be doing in our accounts to collect instant income. Now, what we're going to be doing is we're going to be selling put options. Now, to sell a put option, what we're doing is we're selling our agreement to buy shares of stock at a certain price. It's important to know that you do not need to own a put to sell it. So when you sell a put, you don't already have to own a put in your account to sell it. When you sell it, you're actually entering an agreement. Now, each put contract has an expiration date. So if you enter an agreement, that agreement will only last for a certain amount of time. We sell monthly put options. So each put option will expire on a certain date in October, or a certain date in November, or a certain date in December. And I'll tell you, each time we sell a put contract, I'll tell you how long this put contract or this agreement that you're making is in effect. That will be in the email that you receive. And each put has a strike price. This is basically the agreement price for where we will possibly buy shares. So when you sell a put option, you're agreeing to possibly buy shares at a certain price. That price is the strike price. So those three things you need to know. We're entering an agreement. This agreement has a certain amount of time, and this agreement is to buy shares at a certain price, a price that we believe is an attractive price for us to buy shares of stock at. Now, for every stock, there are many different put contracts. So if you look at GE, for example, there are dozens of different put contracts that you can sell for GE. Coca-Cola has dozens of different put contracts that you can sell. These put contracts trade just like a stock. So the price for these put contracts that you would sell goes up and down based on where the market's trading. And so I watch these put contracts and I watch how much they're worth and figure out which ones we want to sell to collect money into our account and exactly when we want to sell them so that we collect the right amount of money and we take the minimum amount of risk. Now, you can buy or sell put contracts just like you can buy or sell shares of a stock. So that in the picture that you see in your screen right now, we're looking at a string of different put contracts on the right-hand side. And you can see in the little box, there's a price that we would receive if we sold the put contracts, and there was a price that we would pay if we were to buy the put contracts. Just like a stock, there's a price that you would pay to buy a stock and a price that you would receive if you sold a stock. Now today I want to show you a put contract that we can sell on a stock that's ticker symbol is OIL. This is the IPATH Crude ETN, and it trades up and down based on the price of oil. Now, I'm not expecting us to have to buy shares of OIL. What I am expecting is for us to sell a put contract, which means that we're entering an agreement that we could possibly buy shares of OIL, but only if they're trading down at a price where I believe is an excellent price for us to buy shares. Now, really quick, let's talk about what's going on in the oil market, and we won't dwell on this very long. But there's less production in the U.S. In other words, drillers are not pumping nearly as much oil, and that's going to help move the price of oil higher. The rig count, or the number of rigs that are actively working in the U.S. right now, these are the rigs that they use to drill for oil, has been dropping sharply. There are many fewer rigs right now in activity drilling for oil than there were a year ago. And many hedge funds are short oil, which means that they're basically betting on oil falling, and they have been, and they've made a lot of money. But at some point, they have to buy back these trades, and that will help to boost the price of oil. So there's a lot of things that are helping to move the price of oil higher, and we've already seen that oil hit a low and has begun to move higher in the last few weeks. Now, one other thing to note is that volatility for oil, the amount of trading back and forth and up and down, has led to higher option prices. Option prices are typically higher for stocks that move around a lot. And the nice thing is, since we're selling put contracts, the higher price means that there's more income coming into our account. So the bottom line is, I like OIL. At the right price, I would be willing to buy shares, but I believe that OIL, or the IPATH Crude ETN, will be trading higher over the next several weeks. So how are we going to profit from this? Well, I have a trade. This is our training wheels trade that I believe will give us a small amount of income, that will give us a minimum amount of risk, and that will let you see exactly how to put this type of trade into your account today, actually tomorrow, as soon as the market opens tomorrow. So here's our training wheels trade, and I'll be sending you this information tomorrow morning, so look for it in your inbox. But we are going to be selling the OIL November 2015 $7 puts. Now that may sound a little bit confusing right now, but I want to explain. This is actually very easy, and we'll go through the individual steps for how this works. Now you'll have to find this put contract in your account, which you can do in your brokerage account. There's basically, everybody has an area that you can click for option contracts, and you'll search for the option contract for OIL. So you'll look under the symbol OIL, and then you'll look under the month, November. You just need to make sure that you're using the monthly options, and you can see what date each of these put options expire. So we're looking for put options that expire on November 20th, and we're looking for put options with a $7 strike price. Now remember, the strike price is the price that we're willing to buy shares at if the stock trades down that low. Right now, OIL is trading at about $8.30, so it's well above the $7 price point, and I don't expect it to move below 7. Now, in your account, you're going to select the put options, and for this training wheels trade, we're going to insert input 1 in the quantity field, so we're only going to be selling 1 contract. Now, keep in mind, for our other trades, we'll be selling more than 1 contract, but this 1 contract is a chance for us to actually make a small amount of income on this trade, and for you to get a chance to actually see that income go into your account, so you have confidence to make a much bigger trade and make more income that really makes a difference in your account a little bit farther down the road. So when you find the right contract, we're going to sell to open. When you sell to open, that really just means that you're initiating a trade. You're selling a contract that you don't already own, which means, again, that we're entering an agreement. This is different than if you already owned a stock or you already owned an option and you were selling to close that position. So make sure you click Sell to Open, and we'll use a limit order. And a limit order just means that we are going to say, this is how much I want to get from my trade, at least 10 cents or more. Now remember, put contracts actually represent 100 shares for every contract. So when we sell a contract for 10 cents, we're going to be getting $10 in our account. Again, this is a very small trade, but it's a chance for us to learn how these trades work.
Hey, Zach, could I stop you really quick?
Yes, please.
Can you go back to the previous screen?
I can.
One of our subscribers, so Rick, thank you very much for pointing this out. There is a typo on the top of that screen. The top of that screen says October 2015 puts.
Yep, but they're
Rick
supposed to be
pointed
in
out
November.
We were talking about November the entire time. So Rick, thank you very much. Just for clarification, they are the November 2015 $7 puts.
Yep. Rick, thank you so much. I appreciate you having your head up on that one. And you're absolutely right. We should have had that October 2015 $7 put. I think that actually happened when we were originally planning on doing a different trade when we set up this webinar a couple weeks ago. And so we ended up delaying the webinar so we could get more people on and hopefully teach a lot more people how to use this income. But I appreciate the heads up. So anyway, this is what the order looks like in my system. Your system may look a little bit different. It depends on what brokerage you use. E-Trade, Ameritrade, they all brand their orders a little bit differently. But you can see that we've got the ticker here. We've got our quantity of one contract that we're going to be selling. The limit price is 15 cents. And then we're going to hit Sell to Open. And again, Sell to Open means that we're entering this agreement. Now, by entering this agreement, or by selling the puts, we are agreeing to buy shares of OIL at $7, but only, now listen, only if oil is trading below $7 on November 20th when the put contracts expire. Remember, every put contract that we sell has an expiration date. Now, if oil is trading below $7 on November 20th, then we'll be buying shares. Remember, the current price is a lot higher. When I made this slide, it was $8.40. I think today it closed at $8.29. So we're agreeing to sell it if the stock drops a significant amount from today's price, which I do not expect. Now, each contract represents 100 shares. So that means we're agreeing to buy 100 shares at $7. And you should keep $700 available in case you are required to buy shares of OIL. Now, again, this is just a small trading wheels trade, but the nice thing about this trade is that you only have to set $700 aside or have that available in margin in your account in case you're required to buy shares of OIL. Now, there's basically two ways that this trade can work out, and I want to show you the two different ways, the two different things that can happen in our account, and then and that's really it. So hang on, we're almost done, and then we can go to questions on this trade. So if oil is trading above $7 per share on November 20th, the puts will expire. Now, this means that your agreement is over. You no longer have an agreement to buy shares of OIL. The puts will disappear from your account. They won't be in your account anymore, and you'll have no obligation to buy shares of oil. So this is the end of the trade. That's the end of the road. You get to keep the income that you received from selling your put contracts. And now you can look at the market and see what other income trades you'd like to make, or check your email on Tuesday morning and see what other put contracts we'd like to sell. That's the first way, and that's really our favorite way for this trade to end. The second option is if oil is trading below $7 per share on November 20th. If this happens, remember, we entered an agreement, so your puts will be exercised. This means that you're going to automatically buy 100 shares at $7. Now, you don't have to be on top of this. You don't have to worry about actually executing that trade. Your broker will go ahead and take care of it for you. So if on Friday, which is when the puts expire, OIL closes at $6.90 per share, your broker will automatically buy shares for you because the OIL has traded or is trading below $7 per share. On Monday morning, you'll open your account and you'll find that you have 100 shares of OIL. Now remember, OIL is a stock that we want because we believe that oil is going to be trading higher because of lower production and all the things that we talked about before. So $7 is a discount price from where oil is trading right now, and we're willing to buy it at a lower price, especially considering the amount of income that we received when we sold our put contracts. And the nice thing is, once we own shares of OIL, I've got another kind of trade that can actually help you make more income from this position while we hold our shares of OIL. But the idea right now is that there are basically two things that can happen with our puts. First of all, our puts can just expire and go away. Or second of all, we could buy OIL below $7 or at $7 a share, which is well below where the market's trading today. So that's how we make income, is by selling these put contracts. And, you know, honestly, I believe it's the very best way that you can make income from the market today. So with that, Joe, that's kind of the overview of how we sell puts, but I'd be curious to hear what questions we have and see if we can answer some of those. One other thing, just real quick, is that we can't make any individual investment recommendations, so I can't tell you what to do with your shares, but there are going to be some great questions that we can all talk about in terms of just how this trade process works.
And I'm going to start the Q&A section. I'm going to answer the easy ones, and I'll throw you the harder ones if that's okay.
Okay, that sounds good.
Okay, so for me to answer the easy ones, a lot of people want to know, number one, will this recording be available? And the easy answer is yes. After we end tonight, if you reload the screen, let's say in 20 minutes or so, this should begin to autoplay, and you should hear a recording of this event. Also, we will send out instructions once it's posted to our website. It will be on our agorafinancial.com website. Once you go there, you log in with your username and password. You navigate to the Income on Demand screen, and you should see it there. We will send out instructions on when that is available on the website, most likely tomorrow morning when Zach sends the rest of the trade.
Yep.
Another thing, really quick, before I throw you some of these harder questions, is I apologize for the echo. My phone has a terrible echo. I'm not sure why. So for everybody listening that's writing in saying it's a terrible echo, I do apologize. So let me kick you the harder ones. We are getting a lot of questions about the specific order entry. A lot of people want to know, do they say good till canceled? Do they place a market order? Do they place a limit order? So at the point of entering in this put sell, what specific type of order should people use in their account?
Okay, so that's a great question. I would ask you guys, or I would recommend for my accounts, I always use a limit order. A limit order means that we are going to tell the broker what price we're willing to receive. So, for instance, let's say that we're going to sell a put that's currently trading for $1.25, and I tell you to use a limit of $1.15. What this means is that you're not going to accept anything less than $1.15 for selling this put contract. And remember, each put contract is 100 shares. But that's the minimum amount that you're going to receive. If the market's trading higher than that, you're going to actually receive a higher price point. You'll receive whatever the best price is available. But you're telling your broker, I will not accept anything less than $1.15. Or in our case, I'm not going to accept anything less than 10 cents per share or $10 per contract when I use a limit of 10 cents. Now, I do not recommend using good till cancel. Good till cancel order is an order that will remain good until you tell the broker to cancel it. So you could be waiting 3 days, 5 days, 10 days, and then the order could get executed, and you might not know that you have already sold puts because it was 3 or 5 or 10 days later and you forgot that you put the order in. I prefer to use day orders only. Now, that doesn't mean you can't go back in the next day and put in the order again if you'd like to, but I prefer to use day orders, which means that it's only going to be good for the day, and after the market closes, that order is no longer there. And I prefer to use limit orders, which means that we're only going to accept a particular price or a better price if it's available, but that way you don't end up selling a put option for less money than you expected to receive from it. Does that answer it, Joe?
Absolutely. So the next one that we're getting a lot of are about account sizes. Many people want to know, when you showed that screen at the beginning of the presentation to say that you've generated $2,800 in income in the last month, a lot of people want to know what size account you're basing that off of and how they can get started using less. And I know that's what the Training Wheels Trade was about tonight, so if you can cover that full gamut of questions.
Sure, absolutely. So I think the most important thing to realize is that we've got to it's most important to learn how to do these trades first, and then to build size as you have an account that grows in size. So for many people, many of our trades, or most of our trades, I recommend that you put $10,000 aside for each of our trades. That's just a general round number that helps us keep track of how well we're doing and how much income an average account size could receive from our trades. But many people sell fewer contracts, and many people sell more contracts. I've had people email and say that they sold 100 contracts, and I've had people email and say that they've sold one contract of each of the recommendations, and all of that is okay. So one of the things that I try to do each week is to find stocks that are trading at a low enough price that if you don't have $10,000 to put into each trade, and that's perfectly fine, that you can sell fewer contracts and still participate in the trade. So I would say if you have a very small account, the best idea is to take one or two of our trades and to sell the put contracts and to wait until those put contracts expire, and then use your capital to sell a few more put contracts. And as your account size grows, then you'll be able to sell more put contracts. So you can either sell 2 or 3 at the same time, or 5 or 10 at the same time, or you could sell one contract and have more plays open at the same time. I try to make sure that I give you guys an opportunity to make extra money each and every week. But if your account is small and you have the opportunity to take advantage of this once every 2 weeks or once every 3 weeks, and you have to wait until your put contracts expire and then do it again, that's fine too, because you're still getting income. And then as your account size grows, then you'll be able to take advantage of all of our opportunities. But for this slide that you see here, with the amount of money that we're receiving for each trade, this is based on just assuming that you can put $10,000 into each of our trades. And that's just a round number to start with, and you're more than welcome to sell fewer contracts, and that is a great way to get started and to move forward with our income generating strategy.
Let's cover one or two more. It's just past 7:30 here on the East Coast, so again, we know everyone's time is very valuable. Thank you for joining us tonight. We'll cover one or two more questions. If we couldn't get to your questions, I apologize. I'm looking at the chat window right now. We have about 250 questions. I'm trying to narrow these down into the most frequently asked. At any point, of course, you can always hit the reply button to any of the emails that Zach sends you if you have any questions. Those replies will go directly to our customer service department. If we do get a lot of the same questions, Zach can answer those questions in a follow-up email to everyone on the Income on Demand list. So again, just to apologize, I can't get everyone's questions tonight, but let me cover one or two more, Zach, if you don't mind. The first builds on the back of this account size question. A lot of people want to know, what is the idea of selling a cash secured put versus selling puts on margin? And I'll preface that a little bit different way. I know in my personal account, with my own money, I only sell cash secured puts because that's the safest way to do these transactions. But should someone be selling on margin, or do you always recommend cash secured as well?
Okay. So yeah, I can definitely answer that. Real quick, you were mentioning an email for them to respond to emails, and I just wanted to chime in and say that I've got a special email address, askzach@agorafinancial.com, and that is a way that you can send me questions, and I get all of those directly, and of course the customer service team will forward me anything that you send if you reply to our emails as well. But askzach@agorafinancial.com is a great spot to send the questions.
And real quick, just a note on that, Zach can't respond directly. So if anyone's sending something to Zach, what Zach can do is answer it in a public forum. Because we are publishers, we have to do it in a public forum. So even if you write that email address, please don't expect to get an email back from Zach directly. Instead, watch your emails from Income on Demand where Zach can answer those.
Yep, that's good. All right, so there are two different kinds of selling puts, cash secured or selling them on margin. It's real simple. Cash secured means that you actually have the cash in your account to buy shares of stock. So for this particular trade, remember we said that we want to keep $700 available in case we are required to buy OIL. Now, if you have that cash in your account and it's not being used for anything else, you have the cash literally sitting in your account, then this is a cash secured put. The worst thing that could happen in this case is OIL trades lower and you use the money that you already have to buy shares at a discount, which is not a bad thing at all. Now, selling puts on margin means that you don't have that $700 available in your account. This is not wrong. It's not right. It's a personal preference matter. If you are willing to take more risk in your account and you want to sell more puts and you have margin, it means that you're basically possibly going to borrow money to buy these shares of stock, and you would be borrowing money from your broker. That is a much more risky proposition because sometimes we do have to buy our shares of stock. You're able to do that, but I would just caution you to make sure that you really do have money available. Maybe you have money in a savings account that you can wire to your brokerage account, but not to sell put contracts that you really don't have the means to buy shares of stock if the puts are exercised and you are required to buy shares of stock.
Zach, I have one more for you, then we could wrap up for the night. And again, thanks everybody for taking time out of their evening. Thank you, Zach. So final question. Many people are writing in wondering if they can do these type of trades in a retirement account, in an IRA, in a 401k.
Yes, that's a great question. So yes, in an IRA, in a Roth IRA, these are great ways to make extra money. The nice thing about using these in the IRA is that you don't have to pay taxes on them. If it's a Roth IRA, you don't ever have to pay taxes on your income. And if it's a regular IRA, it's income that is shielded from taxes until you take money out of your IRA. So these work perfectly in a Roth IRA or a regular IRA. You just typically can't use margin in those accounts, which is just fine. So once again, we're getting back to a cash secured put where you're selling a put and you actually have the cash in your IRA to buy shares of stock. 401ks, it depends on what your 401k provider allows you to do. Typically, 401ks are just for mutual funds, and they have a limited number of mutual funds. But if you have a 401k that allows you to trade stocks, chances are that you're going to be able to use this strategy and sell puts. You just have to be able to ask your 401k provider if selling puts is something that they allow in that program.
Zach, thank you very much for joining us. Thanks to everyone that has written in. I see, again, a ton of different questions that we're not going to be able to get to tonight. If, as a follow-up, I mentioned this earlier, Zach mentioned it earlier, if you have any questions whatsoever, you can always direct them at our customer service, or you can write to the email address that Zach mentioned earlier. So, Zach, can you give that email address one more time?
Yes. Once again, it's AskZach, AskZach, at agorafinancial.com. And I just want to say thank you guys so much for taking time out of your evening to be here with me. I'm really excited about this. I'm really hopeful that this helps some of you be able to generate income from our trades. And I love hearing from you. So I really hope that even if it's just to say hello, that you'll send me an email at askzach@agorafinancial.com and let me know how you're doing.
And again, both Zach and I realize that a subscription to Income on Demand isn't the cheapest of services. We've priced it at a premium for a couple different reasons. One, to make sure that we can provide the best customer service to a small group of people who are serious about using this strategy. And then second, so that we do attract the right type of people. So we're serious about both of those things. If you need us at all, please feel free to use that question box for customer service. If you liked this webinar, let us know. If you've hated this webinar, let us know. Zach and I have also talked about earlier today when we were kind of doing a dry run for this, we talked about doing another webinar on covered calls, which some of you have written in about and asked questions about. That would basically answer the question of what happens when the stock does get put to you. What does Zach do next?
Yeah.
So we thought it might be a little confusing to do both of these tonight. We thought it might run a little bit long. So if you want a separate, let's say, seminar/webinar on covered calls, just quickly to gauge interest, let me know in that chat window. If you can write in and say yes or say no, in that chat window, I'll monitor it over the next couple minutes, and Zach and I can talk afterwards. So again, thanks to everybody tonight for taking the time out of your busy schedules. Thank you for trusting us with your subscription fees, and we take this very seriously, and we want to make sure that you have the same opportunities to generate income that we love for ourselves. So Zach, thanks again. Everybody at home, thanks again. Any final parting words, Zach?
I just want to say that I'm excited about this. This is a tremendous way to make income, and I'm here for you guys, and I'm really thankful that we've got this group together of great traders who are making income.
I am looking at the chat window right now, and it is lighting up with yeses. I see one from Rick. I see one from Kathy. I see one from Jerry. I see one from Ron Puri. Everybody's saying yes on the covered call webinar, so we'll pick a date in the future, and we'll do that one as well for everybody at home. So thanks, everybody, and we will see you tomorrow morning via email when Zach sends out his trade. Thank you.
Awesome.